10-year note yields moved lower early in the session after we got a weaker than expected ADP print ahead of Friday's non-farm payroll number. We saw yields move all the way down to session lows of 418. Now, we didn't quite get to yesterday's low. Yesterday, recall, we saw yields trade down to 410 before bouncing higher into the afternoon. Today, we saw almost the same type of trade. We saw yields move lower early and then rally throughout the session, get all the way up to 428, 10 basis points off the lows today before closing out at 427. Now, that's a big move from yesterday's low. It's about 17 basis points off yesterday's low. But taking a step back, we are still well off those mid-February and mid-January highs. Yields continue to remain near the lows as the market continues to wait and watch for some clarity, whether it be on the president's economic policies or whether it be from some of the geopolitical risks and economic risks. Obviously, there's a lot of them floating around out there, but clearly yields have been in a free fall to the downside, and over the last 2 days, we've seen them get their sea legs and move higher, again, closing today at 427. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And as we've seen yields moving lower over the past several weeks, we've seen volatility moving higher. In fact, yesterday we saw volatility close near 4-month highs. Well, today we saw it edge lower, despite the fact that yields were higher, coming off those 4-month highs, but still remaining elevated, perhaps a tip of the hat to what's to come later in the week with non-farm payroll numbers as well as the Fed share testimony. That brings us to what do we have tomorrow? Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We'll also get the challenger job cuts. We'll get an ECB announcement prior to those two releases where the ECB is expected to cut rates. And then we'll get some Fed speakers filtered in throughout the day. So a lot going on tomorrow, again, highlighted by challenger job cuts and jobless claims.